Goldman Sachs is making a bet on Facebook that values the company at $50 billion. This is according to the New York Times. The Times says Goldman is investing $450 million into Facebook. Russia's Digital Sky Technologies is chipping in another $50 million. Now, as part of the deal, Goldman is also expected to raise $1.5 billion for Facebook. Our friend Lou Kerner is with us now on the phone. Lou has analyzed social media companies for Goldman, Merrill. He's a former CEO of Multimedia, and he is now with Bedbush Securities. Lou, thanks so much for checking in with us on this big story. So does the $500 million increase the chances that Facebook goes public, or does it mean that if Facebook can raise money outside of the capital markets, it just doesn't need to ever do an IPO?
Yeah, well, Morning, Deirdre, I think at the margin, this increases the likelihood that Facebook is going to go public. But Facebook already, even before this transaction, had significant access to capital. We've seen a very increasingly fluid private market for shares of Facebook. And, you know, Facebook, Mark Zuckerberg, is really focused today on ubiquity, and I don't think he has an interest in taking management focus away from that and doing an IPO. And I don't think he wants to take the employees' focus away either by doing an IPO and having his employees sitting staring at their price all day long.
So, Lou, I mean, what does Facebook do then with the money in the meantime? I mean, do you feel like Facebook is going to go out and, I don't know, raid some top Silicon Valley talent? Do they make an acquisition? Do they develop new products? What do you think they're going to do?
I mean, I think what we're seeing with Facebook today is the scaling of a company at a speed that we've never seen before. And so I think we're going to use the capital to continue to invest in the company. You know, the company will likely have over $1 billion in capital expenditures in 2011. They're also likely to pick up the pace of acquisitions, you know, to kind of 1 to 2 a month as they continue to build out around the globe. And they continue to be in a war for talent with Google and other, you know, top Silicon Valley companies. So I think they're going to use the money for all those things.
Lou, what is Goldman Sachs getting out of this?
Well, I think Goldman is getting a few things. First, it gets to build a relationship with the clear leader in social media. And as I said, I think Facebook to do a lot of acquisitions, and now Goldman gets a seat at the table for those discussions. I think also Goldman gets to burnish banking reputation. Now they're clearly the leader in banking for social media companies. And I think also Goldman is getting a good deal here. Even at $50 million, that's a 15% discount to shares of Internet of late in the private markets, and probably close to a 50% or more discount to where the shares would be trading at if it were public.
So if this is a pretty good deal for Goldman, it's arguably even a better deal for Mark Zuckerberg. I mean, this would double his personal fortune, right?
Yeah, well, as I said, it's actually a discount to where it was trading at in the private marketplace. But Facebook obviously also is now going to get advice from, you know, who are undoubtedly the smartest bankers in the world, and as they're trying to scale a company at a speed that the world's never seen before, they're now going to be getting advice on who to partner with, who to acquire, you know, who to potentially get additional investments from, and who to hire. So I think it's a great win-win for both Facebook and Goldman.
A great win-win, and I guess worth noting as well that Goldman employees are not allowed to use Facebook at work. We thought we'd just throw that in. Lou Kerner, thanks as always for being with us.